Hello, everybody. This is John Blank, Chief Equity Strategist at Zacks Investment Research. And today I'm going to go through the economies of Europe up to the end of 2022. First off, here's our disclosures. These are my views, not the views of Zacks Investment Research. All right. So today we have Europe's economies, 2 years end 2022. I'm going to do a two-part series here. This is just the macroeconomic structure of Europe to the year end. So I want to go first through the major macro factors. I'll look under the hood in Europe and take a look at the parts and stories that are playing out. It's worth updating yourself on what Europe is now, not what you may think it is as a macroeconomic force or forces. Part two, we'll go through the producer price indexes, the consumer price indexes, and frankly, some of the most interesting stuff, the consumer confidence measures across Europe. We'll finish up with these crisis factors. These are the external factors that have typically hit Europe in the last 10, 15 years, the current account problem, the government debt problem, and of course, the most recent situation, the energy markets. So let's get going. All right. Number one, the major macro factors working under the hood in Europe. All right. First of all, a new population change in Europe. Notice that this is going back to 1965 up here. This is 95 and 95 here. So not quite the same. This is the longest period. So I want to look at this just at a very high level. You can see they used to have 1% population growth in the 60s, and it's been going down, 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 down for some time. Now, notice this here. This is Italy. Italy is a story we'll hear a lot about today is struggling. And you can see that somewhere in the 2012 to 2021 period, Italian population growth has become negative. That black line is the line of the Rubicon. You can also see Poland is just dipping always below zero since 2000. I think a lot of that is migration. And here you have Spain doing a big surge for 10 years, but now it's gone. So these are all very different stories. You can see that we have the migration story of Spain, we have the excitement of Spain then disappearing, or the migration story of Poland. I'm sorry, and then we have the story of Italy getting to be one of the basket cases of Europe. Down here, this is Romania. This is, of course, another one of these negative population growth stories in the East. Here is Hungary, also a negative population growth story. Keep in mind that actually, in context, Poland is in far better shape than its neighbors, Hungary and Poland. Now, let's take a look at Greece here. Greece, actually, again, you can see that negative population growth. So, a lot of countries looking at negative population growth. I count Portugal and Hungary here. I count Romania and Greece, and I count Italy and even Poland on the edge. So a lot of negative population growth to talk about. Obviously, you cannot grow economies when you have negative population growth. Very difficult. All right, bond yields. All right, so this is the big Greek debt crisis to 25%, 2012-ish, and then there was a return in 2016. Obviously, Italy did come up to the 7.5% range. It's not there now. Well, actually, interestingly enough, Poland, and in here we've got Hungary, and up here we've got the Czech Republic. The rates out in Eastern Europe are much higher than anywhere else in Europe. So while there's negative population growth in places like Italy and Portugal, it's not a situation yet that has gotten to where it is in terms of the stress that's going out in the Eastern European areas. Greece is frankly in decent shape relative to itself. Keep that in mind. I cannot believe that, but it's true. And here we got Italy, obviously showing some stress more than France, but less than Poland. All right, GDP growth. Worth noting which ones have reached new absolute year GDP highs. Again, we want to look at the ones that have come out of the things and look better. So first off, we've got Czech Republic and Sweden. These have been really strong economies for 20 years. Best to know that. And you can see that for the most part, Sweden is well above its prior high, and the Czech Republic is still trying to get back there. But keep in mind that Sweden actually is well above its prior high and back on trend. Over here, you see Belgium is actually above its high. And here you see Austria is above its high. Those are the two strong ones in this picture. Down here, Portugal and Greece, they have returned above highs, but they're much weaker economies. You see, Portugal and Greece now are actually kind of similar in terms of their economic potential. They really pulled away here from Austria and Belgium, which are much stronger. Here we've got the powerhouse that is fascinating over the last 20 years. This is Poland. Look at how strong it has come out. It has come out stronger than anyone in all of these charts. That gives you a good idea why the rates are so high in Poland right now. The growth is so high in Poland. Poland is a real success story in Europe, and it needs to be singled out for that single fact alone. All right, unemployment levels. I just want to focus on the red lines. This is Spain. Going back to the 90s to now, you can see Spain, as in general, did enjoy, got out of a lot of unemployment and kept working itself down, and is actually in better shape than you might think. Here you've got Portugal, also working itself down to lower levels of unemployment. And here you've got Italy. Italy is very different. Again, if you want Spain, Portugal, or Italy, they're kind of similar sister countries. You can see the story of Italy is far worse. For whatever has happened here in the last 6, 7 years, Italy has just really not generated anything within itself. So we've got to single out Italy as a worry spot. All right, manufacturing production. Here I want to point out Hungary is actually doing quite well at the top. This line here, this is Austria. Talked about Austria before. Austria is doing quite well in the middle. And down here, we've got this bright aqua line. This is Sweden. And you can see Sweden had a tough go of it in the financial crisis, came out really strongly, and has actually come out decently well out of this pandemic as well.
Hi, I'm Tom Carlson from Zacks Professional Services. Today, I'll show you how to use Zacks Advisor tools and our award-winning stock research to improve the performance of your client accounts that hold individual stocks. Zacks Research was rated as the #1 performer versus 37 other major research providers over the last 6 years by Investars, the independent evaluator of U.S. equity research. Why? Because the Zacks ranked #1 stocks dramatically outperformed the S&P, and this is not a backtest. By following our advice, you can improve the performance of your clients' portfolios by easily identifying underperforming stocks and replacing them with names that have a better chance of outperforming the market. First, you'll need to connect your custodian to Advisor Tools. This is a 5-minute, one-time process that transfers the stock, mutual fund, and ETF holdings from all of your client accounts into Advisor Tools and automatically updates them every night. Next, you'll set up email alerts to notify you when pre-selected alert criteria are met, indicating potential weaknesses among your clients' stock holdings. Examples of alerts that you can set include a change in the Zacks long-term recommendation, changes in brokerage firm recommendations, earnings or revenue surprises, or any valuation ratio based on over 250 data items tracked for over 6,000 U.S. and Canadian public companies. When an alert is received, use our comprehensive screening software to identify stocks with similar characteristics to those you're considering selling. You can screen all U.S. and Canadian public companies using over 600 data items. Many advisors find the Zacks long-term stock recommendation, broker recommendations, and proven predefined screens created by the Zacks research team to be most helpful in identifying stocks that will outperform. Once you've used Zacks research to find a potential replacement for a weak stock, use any of the 13 analysis views to perform your due diligence before making your final decision. Once you've selected a new stock, Advisor Tools will identify the accounts that hold the stock that you want to replace so you can easily make the trades. That's it. There's no simpler way to manage a complex set of client accounts that own individual stocks. Visit ZacksPro.com to request a demo or to learn more.
All right, this is another story we need to be updated on. The sad story of the UK. This is UK the unemployment rate, you can see coming out of the pandemic, it is now at a 25-year high, much higher than in, yes, Russia. The Russia is very low unemployment, by the way. You keep it down to the 1% level. Over here, consumer price index is very shockingly high and low in Russia at a 15% inflation rate, somewhere at the eights and tens in the UK. Over here, you've got a story of strong manufacturing production, by the way, in Russia. And frankly, something that shows you here is that the UK really was doing okay until it basically the financial crisis, and then since then it's had a long, hard fight back. Here you've got GDP. You can see that the downturn in the UK was substantial. It was huge. They took a huge hit in terms of their GDP during COVID, and they have not returned to a high above that pre-COVID level, even now. And rates, you've heard a lot about the UK gilts. These are basically back to 12-year or 14-year highs. Very tough to say much good about this country at this point in time. We've got to worry about the UK. Russian Federation actually looking okay. So basic point here in Russia is they've got a lot of inflation. It's spiked higher. It's done this before. Probably not a concern of theirs, and they do keep the unemployment rate extremely low to keep the stability high, and that's part of that is the manufacturing production's gone up through the roof. So Russia probably in better shape than you think. UK probably in much, much worse shape than you think. So now we've tagged two very serious worry spots. The UK is one, Italy is the other. All right, on to consumer price inflation, CPI, and consumer confidence. Okay, this is kind of noisy, but I just want to point out, for the most part, the PPIs have all rolled over. So there's good stories at the back end of prices. The PPIs are well past peak in Europe. The import prices, here I want to just point out here, this is primary metal manufacturing in red, and here we got agricultural construction and mining machinery in blue here. So there has been post-pandemic a real surge in the metals and the machinery manufacturing because of the goods production in Europe. That is a strong point, and keep that in mind that prices for these types of things are very strong right now. The consumer price inflation rates, just keep in mind that back in the 90s, for example, you've got Hungary with a 25% inflation rate. These are actually quite low relative to all the others. Just point out that all have moved up during the pandemic. There's really no single country out there, probably in the world, that has not seen higher prices in the consumer space. This is probably the most interesting thing. All these are poor. Of course, consumer confidence is falling apart because consumer prices are high. We all know that story. Many of them are gotten down to their 2020 COVID lows, but there is one exception, and that is the Netherlands. The Netherlands, of course, much more biking centric and renewables, and it has come back and it has not experienced any of the pain in all of these countries. So if you want to know one country that's probably much better than anything right now in terms of its feelings, that is the Netherlands. Italy, of course, actually worse than the pandemic in terms of the confidence. That's one thing to flag. Greece is much worse. And you can see even Poland and Austria, even Sweden, they're all much worse. So very hard to find a strong point here, other than the Netherlands is really quite good. And frankly, Germany is better than you might think. All right, retail sales, I just want to point out, Germany is in the black line here. It has held up really well. Portugal is the dark blue line. It's actually held up also pretty well. And down here in the blue is Italy. And you can see from a long-term to short-term perspective, Italy's just done nothing for 12 years. This is, again, flagging from a retail sales perspective over a long period of time, that Italy is just not really a strong country right now. All right, external factors. Let's get through this. These are the old problems of Europe, and we need to revisit them. Number one, the current account balances. Of course, who's strongest here relative to Greece and Romania is, of course, the Netherlands. The Netherlands has a strong and balanced trade account. It's worth noting that, as well as Germany has a strong and balanced trade account relative to its neighbors. Down here, you've got Spain, Hungary, and the Czech Republic, which actually don't look a whole lot different. And over here, you've got Italy versus all the others. Again, Italy actually does decently well in trade. So the one thing I just want to point out here is, you've got the Greece and Romanian stories. These countries are struggling not only in population, but they're also having troubles importing things from the rest of Europe. It's been a problem for them for some time. So again, we flagged Greece and Romania, Italy, and on we go. General government debt. Of course, we've got to have Greece here, and Greece is also again here. Greece here is against Poland, Portugal, and Austria. I just want to point out here that Poland is at the lowest level now. Very good, strong economy, like I pointed out. Actually, Hungary is in good shape here. Italy is up there with Greece. So this is the issue again. Greece, Italy, we heard that story before. Spain has come up in terms of its debt. So there's your southern debt story playing out through Greece, Spain, and Italy. And we need to keep on top of that. Once again, it's another problem, but as it goes, the rates have still not risen to the levels that they were back in 2015. Gas consumption. You heard a lot about this. I found this interesting in the sense that it really is, for the most part, started with, you can see over here, this is the Belarus imports coming down in 2021. Then it was the Ukrainian imports, which have been coming down for 2 or 3 years. And then you see the Nord Stream just poof. So I found this fascinating that it's really been a rolling period of time with Belarus and Ukraine being under stress and importing natural gas from Russia down, down, down for 3 years. And then it was now to the rest of Europe. So it really was playing out. It might have seemed sudden in March for the Nord Stream and other things, but it really was playing out for a number of years in Belarus and Ukraine. Of course, that was the story of their elections and the pull away from the Russian story there. In terms of gas-fired power generation, I want to point out that this is actually no worse than it's ever been. It's low, of course. It's not actually that bad. I came away from this with one other point here. This is LNG. You can see a lot of what's going on here in terms of imports. It's coming from liquefied natural gas. They're basically shipping it in now that they don't have the pipelines. But overall, it's actually in much better shape than you might think. And that was something I came away with. I came away with a much better understanding of the natural gas problem, not as unsolvable as you think. And of course, gas prices have collapsed in response to that. A lot of that's that LNG shipping that's going on. All right, electricity. The main thing I want to point out is kind of hard to look at. This is the renewable share, the orange line, and this is the fossil fuel share, and they basically go up and down in odd ways, but counter-cyclical ways. And right now, the renewables are very strong, as you might have guessed. What's driving that is actually solar. You can see that here. The solar production increases are really coming up and playing a major role in Europe right now. And that is something to keep in mind. Solar is having its moment in Europe. All right, so I'm going to finish up with this slide. It's basically pointing out renewables in Europe are actually extremely high right now. 43% of energy is from renewables. It's over fossil fuels by a significant mark in the second quarter back in that period of time when we had the most recent information. Electricity prices still extremely high, about 50%. That's extremely high. And again, highest increases, and unfortunately, Italy is part of that story. Down here, though, I found the electric vehicle story really taking off in Europe. 19% market share for electric vehicles in Europe. That's lower than in China, but it's almost 3 times higher than the United States. So the main point here is with renewables or electric vehicles, Europe is actually ahead of the United States by quite some margin. And keep that in mind. It is a story of many stories, but again, the Netherlands and Sweden, Poland are the strong stories. The weak stories are obviously Italy gets singled out, Portugal to some degree, Greece to some degree, Romania and Hungary over in the east, also from their population growth perspectives, considered worrisome, and the higher rates of interest that are being paid out there. And of course, we cannot leave the UK out of that story. So again, UK, Italy, and other parts of Hungary and Uh, Romania are probably the most worrisome from an economic perspective. I think Germany is probably going to straggle through here just on the edge. And I don't know much about Portugal enough to tell you what they will do, or Greece, but they look better than you think. We've got a few worries out there. UK and Italy, probably the dominant ones. The other two countries, Romania and Hungary, are just simply too small to worry about. Keep your eyes on Italy and the UK. They are real problems, and basically realize that the energy project of Europe has come a long ways, and they're in better shape than you might think on that note. So, all in all, I hope you enjoyed this. We're going to go through stocks in Europe in our next section. And this is just the macroeconomic framework for that discussion. If you want to get a hold of us, it's 866-794-6065. If you want to get an email to us, strategycall@zackspro.com. If you want to find us on the web, www.zackspro.com. We've also got a LinkedIn page, and we can be found on Twitter at @ZATools. That's it for me. I hope you enjoyed yourself, and we will reconvene in another 2 weeks.